Hello and welcome to today's post-market analysis video. This is the post-market analysis of the 7th of February 2022 and let's check out Bank Nifty first. So see, while analyzing price action, you should always see how the day's first candle opens, and the day's first candle was not a very bullish candle because it had this wick here, but it did show signs of bullishness, but it had to be confirmed. Why I say that was because you had CPR right on top of it. See, I'll just show you the CPR here. So this is the CPR. Whenever you see price taking resistance and forming this kind of wick on the top, you should always wait to see what the price action is showing in the follow-up candles. So as expected, the second candle showed this kind of a red candle, and then you saw this bullish pin bar again. So what you know here is that coming from the previous day, I had said in my previous video itself that here you had a demand zone coming from this area. So the PDL was going to be an important area because price had taken a bounce from here, right? So you could see that that was a place from where price could come and bounce. Now if that is a demand zone, you now know that there are buyers sitting in that area. So where are the buyers? The buyers are here, right? And when you see that the next day the price is taking this kind of support right at the same area, you know that it is a place where you will be tempted to go long here, isn't it? But then you have the CPR straight ahead of the long position. So was it a good place to go long? It was not a good place to go long since the CPR was right ahead. So one place where you can take a trade, a long trade, is on the close of this candle had CPR resistance not been here. The simple reason why is because there is a demand zone here, and this bullish candle is formed at the demand zone itself, and then this pin bar again is formed at the demand zone. So this is also a good candle to go long. But then if you go long on this candle, your SL is here, and then your target will be at the central pivot. But then that is not a good risk reward ratio, isn't it? This is not a good risk reward ratio. It is not in your favor. So it's best not to take long trades there. It's best to let that go, and you should wait to see what price action is showing you later. And here you could see that price showed some volatility. It jumped from here again. Now here you see that there was resistance. So you should mark this line also. That is the close of the first 5-minute candle. That is also an important close. Now let me delete this and I'll explain this to you. So if you mark this as a resistance, you can now see that price is stuck between these two ranges. Okay, and now let me extend this line here further a little bit. Yes, now you can see that price is stuck within that range. So in such cases, ideally you should look for trades above or below that range. But as we have just said, above that range is CPR, right above it. So when will there be a long trade? I had also explained this to you in yesterday's analysis video, that unless this specific zone is broken by a strong green candle like this, you should not be looking to go long. So had this resistance been broken, then you would have waited for central pivot to be broken, not just the central pivot but the entire CPR to be broken with this kind of a strong bullish candle. But price did not go to the CPR, and instead price went down, and it went and broke the previous day low as well as the current day low, right? So that was a breakout kind of a trade where you know that the previous day low is the demand zone, and now price is breaking out of that demand zone. So it's a breakout trade. Now whenever you see a breakout trade, you should be careful taking such trades, and you should watch price action before taking such trades. So can you tell me the candle on which you could have shorted? See, this was the wick here, isn't it? This was the wick, and this was the candle which was the 11 AM candle. You can see it here, which broke that low. So one probable entry today was to short at the low of this particular candle and keeping your SL up here. Okay, let's write down SL here, and then where would be your logical profit booking? It would be somewhere within the virgin CPR. What is the virgin CPR? See, we have already marked here, this was the Virgin CPR coming from the 2nd of February. So the profit booking should be done somewhere within this area. So wherever you see that your 1:2 is achieved, you should take your profit. So this would be your SL and this would be your target. So wherever you feel that your target is achieved, you should book your target and get out of the trade, because you see the Virgin CPR right below your entry, and you could see that your SL was small enough today, and then you could have booked your profit at the Virgin CPR itself. Now usually what happens is, if you want to trade on the Virgin CPR, I have said in the strategy that you take trades based on the reversal of the Virgin CPR, not the breakout. So was this the place to go short? No, this is not the strategy that I have explained. I have said that you should look for reversals from the Virgin CPR, look for candles that close outside Virgin CPR. So if this green candle had closed like this, then you could have taken your SL here and your entry here. Then you should ensure that your profit booking should be somewhere at the previous swing high. So that is what your target would have been had your entry been here at this, somewhere around this area. Okay, so that is how you should be looking to take Virgin CPR reversal kind of trades. But today there was no reversal outside the Virgin CPR. You saw that Virgin CPR did not act as a strong support. Okay, so now based on this price action, let's see the levels for tomorrow. Now this Virgin CPR does not exist, so you can delete that Virgin CPR. Important areas to be marked are the PDH and PDL. Okay, so since price has fallen from here to here, we know that here price could not break this level here, and it bounced from here. So you know that the PDL will act as a demand zone. And where would be your supply zone? So for the supply zone, I would suggest you mark a zone instead of marking just one line. So that's your supply zone coming from today's price action. And you also have Virgin CPR coming from today. So you can mark this entire area as Virgin CPR plus supply zone. So keep that area ready. And we also have one level which is at this point where you can see that price broke out of this zone. So you can mark the low of this candle, which is the breakout area. So you can see that this being the demand zone and price broke the demand zone here. So you can mark the area as an important area for tomorrow. So whenever price returns to that area, you can see some reaction. So what you can do is you can also place your line here at the previous day low as of today. Okay, and then what you can do is you can go back and you can draw a box around this area. So you can make a zone again. I like to make zones because they are highly effective, because whenever price comes to that area, then you can ensure that you don't take a trade in that area. So you can mark a zone like this and keep that area ready. And again we have the demand zone from the 1st of Feb here. So that demand zone is yet untouched. So keep that area ready for tomorrow. You can see that the CPR for tomorrow is pretty wide. As I had said in yesterday's video, the CPR was average to narrow. So you can have a bias towards a breakout or a trending day. So you can have your bias towards breakout trades. Tomorrow you can have your bias towards something like reversal trades, like double top or double bottom patterns. I have in the past video explained about double top and double bottom patterns, so you can go back and see those videos for yourself. There's one more area that you can mark, and that is this area where you can see these wicks. So you can mark that area. You can see this wick coming here. So this shows that this area acted as a resistance, and when price tried to bounce and take resistance, this area price could not go above it and it again fell. This will be a support, and this area will act as a resistance if price opens within those zones tomorrow. So I think that's it for Bank Nifty as of today. Let's go and check Nifty now. Okay, here is Nifty as of today. Now Nifty had a very strong bullish candle today. So again the CPR was right up here on top of that first green candle, and the first green candle could not break the CPR. and instead it took resistance from there and it fell with this red candle. Now here let's go back a bit and check. See, I told you in yesterday's video we had marked this level here, the PDL, as the demand zone. So you know that the demand zone at this level is acting strong whenever price forms this kind of an opening bullish candle. Now here, was it a good trade to go long on this candle? No, it was not, because right above this candle it was the central pivot, and since the CPR was not broken, there was no long trade for today in this area. So where was the trade? Here. See, now you know that this is the demand zone. Okay, this is the demand zone, and the first candle made its low at this point. So what should you do here? You should go ahead and mark a line here. Okay, you should mark a line here. Now you saw that the next candle, which was the third candle of the day, it came down up to here and then it was pushed again. So now where is your new demand zone? Let's go back. Just delete these lines. Okay, the new demand zone now is in this area, exactly here. Okay, so now what do? This is your demand zone. So now in this entire area, sellers were trying hard to push the price down, but they could not. And finally, this candle here broke the demand zone. Let me draw that line again. This is the fresh demand zone, and this demand zone was broken. As I had explained to you in a prior video, whenever you see that a level is broken out of with consolidation, after consolidation, that level is convincingly broken. So such breakouts usually hold. So if you are a support resistance player like me or a trader like me, then you know that coming from the previous day, let us mark the previous day low here. See, this was the previous day low. This was your demand zone. Now later, after the first candle, this becomes the demand zone, and after the third candle, this area that we have marked here becomes the demand zone. Okay, now this area, after it is broken, this was the candle which broke it, and now let's delete these lines so you can see it clearly. Once that area is broken, you know that this is where the breakout line is. Okay, so now you can see these wicks on the top. See, can you see these wicks here? These wicks are a sign that sellers are not allowing the price to go above that area. So what do I always say to you? That my favorite kind of entry is where I take an entry into the 50% pullback towards the breakout candle. So as you can see, today my entry was at after the 10:05 candle, and you can see I posted my trade book here, the order book here, so you can see for yourself how I traded. See, my plan was to short this candle here, which was this candle. I'll mark the high and the low of this candle. See, it was this candle that I had shorted, but when had I shorted it? I had shorted it in this candle when it showed me a pullback. So it gave me a pullback, so my SL was somewhere in this zone here, above the previous day low and well above the breakout line. So this was the breakout line, and I had placed my SL. I wanted to place my SL very safe, so this was my SL, and what I had planned was I would take my profit booking back at the S3 pivot. Why S3 pivot? No specific reason per se, but I know that when price breaks out so close to one daily pivot here, I know that the S2 is not going to hold, but there is a chance that the S3 will hold. So I did not want to take a chance after the S3 pivot. It does not matter where the price goes after that, and this fall does not matter to me, and I do not suffer from the fear of missing out of this rally. It doesn't matter because my 1:2 trade was already done here. So my risk reward was achieved, and it was actually a 1:2.5 kind of a trade for me. So that was already achieved, and that was it. I was happy with my trade and I was out. So that is how you should look to trade. Trade logically. This is how you logically explain to yourself. This being the first low which was broken, and this was the second low which was broken, and that was broken convincingly by this big red candle. So then you wait for a 50% retracement in this candle. If it comes fine. If it goes away, then you should look for other trade entries. But I wanted my SL to be well protected, and then according to this, when my SL was well protected, I am not worried anymore of staying in the trade. And I had decided to take my profit back at the S3 pivot. So as you can see, I had closed my position by 12:03. That was the 12 to 12:05 PM candle. So that was the trade entry with logic for today. And as you can see, Nifty fell miserably today and it broke the previous demand zone coming from the 1st of February. We had marked this previous demand zone, so that was broken. And as you can see from behind, there was a virgin CPR coming from the 31st of January here, which was also broken. And so let's mark the levels according to today's price action now. So let's delete all these levels and let's go ahead. We can delete this PDL also here. You can see that the PDL acts as a very strong, the PDH acts as a very strong supply zone. So ensure that you mark this entire area out. Don't mark the CPR because anyway it's very narrow and you see that there are candles inside the CPR, so it's no more a virgin CPR, so don't worry about that. And now you can see that price has broken this level here, and that breakout level acted as a strong resistance in this area, and after that price pushed further down. So now that area acts as a strong level whenever price approaches it. That is how you should mark those levels. So you have a wide CPR tomorrow. Whenever price reacts like this on the previous day, you do tend to have a wide CPR. Whenever there is a trending day, the following day will always be a quiet or a range bound day. So have your bias towards the double top or double bottom patterns, as I have mentioned in the previous video. If you have not watched it, please go and watch the previous videos. Then you will be able to learn how to take entries based on those patterns also. And then again we have the PDL as we talked about in the Bank Nifty analysis. Price after falling so much today could not break this level here. So the PDL from which it bounced, it will be a support for tomorrow. So those are the important levels. We do have a virgin CPR coming from the 28th of January below this level. So you can just extend this line further, and whatever levels we have marked prior to that, see this is a supply zone, you can just extend that zone. But you can see how severely price is falling, so ensure that you have levels below it marked if you're trading purely based on supply, demand or support resistance like me. It is very important for you to mark those levels. Another important level is this here, which you can see here. See, price after falling tried to break this level but could not break, and then after some consolidation in this zone here, it fell further. Then you can see the consolidation extended to this area also. But since that area is within the CPR, you don't bother yourself with marking those levels. I keep saying in every video, don't make your charts muddy. Keep them as simple and as clean as possible. It will help you to take trades in a much better fashion. So those are the important levels for tomorrow. If there are any more levels I find, I'll post them on Twitter. And that is it for the price action analysis for today and the important levels for tomorrow, that is the 8th of February 2022. If you've liked the video, please hit the like button and subscribe to this channel, and also hit the bell icon so you're notified each time I post a new video. I hope you're liking these EOD analysis videos. Do leave your comments in the comment section below, and thank you for watching this video. I'll see you in the next one.